Tips for dealing with the bank. So perhaps you're renting in a property where it is run by a body corporate.
Understanding the basic calculation, income minus expenses, and you want to be left with a positive income.
It is a very tough game. It's not easy at all.
To stay ahead of knowing exactly what your clients need, what their teething issues are.
Have a joint move-in inspection.
That a lot of people that are coming into sectional title homeowners associations are just like you described, not only first-time homeowners, but first-time owners and residents in community schemes.
They get to see the perspective from the other side of the aisle. And I think that's a really important thing to do.
It's a market that's estimated to be transacting at least 9 billion rand per year. So it's a huge market.
In order to get there, you need to be able to build up a track record.
Your cash flow model needs to be sharp.
A quote comes to mind. The best time to buy a property was about 10 years ago. The next best time is now.
Good evening and welcome to episode 87 of the Private Property Podcast. I'm your host, Zama. It's the Monday edition of the Private Property Podcast from a very freezing Gauteng. I know we're expecting a cold front from, I think it's the Western Cape. So I do hope that if you're in Gauteng, you are keeping warm this evening. And of course, we're talking property. It's the new start of the week. And this evening, we will be exploring asset management tips for new property investors. We certainly know that a number of us are looking to get into property investment as we want to take advantage of historically low interest rates. And of course, there are always different ways to find out how to best manage that property portfolio. And this evening, we're going to be looking at how to do so from an asset management perspective. We're probably wondering, what is asset management? What do asset managers even consider when they look at an asset in broad terms? And of course, we'll be delving into what it entails from a property perspective and to give you tips as a newcomer property investors. But of course, for those of you already in property investment, you certainly want to listen out on this one, because this will probably help you scale your portfolio. The moment you start looking at your properties and the assets from very different perspectives, it certainly does help in not just how you manage it right now, but also how you scale it. But before we start with this evening's conversation, we actually want to promote the property guide. So I know a number of you have certainly asked, what is it that you need to be reading if you want to, get a better sense of how to manage your property portfolio? Certainly looking at different resources that you should be getting into. And this one is certainly one that you do not want to miss out on. As you probably know, that the property guide is brought to you by Private Property, and it certainly is a must read. I've went through it. I use it certainly as a resource because it really does explore different aspects of your property journey when you're a property investor, or perhaps you're looking for a home, or even if you are a tenant. And it really is for somebody who's looking to understand the ins and outs of buying, selling, renting, or investing in property. Certainly looking at providing answers to all your biggest property questions. This book contains all the information you need to climb the property ladder. And it is one of those resources that are fairly simple to read. I know sometimes, property jargon can get quite overwhelming, but it really is simple to read and understand. Now, if you want to get your hands on this one, there currently is a sale happening, and you can get this incredible book for 150 rands, or of course you can go to www.privateproperty, or rather to thepropertyguide.co.za to get your copy. But of course, you should hurry because this offer is limited. So that's 150, and go to thepropertyguide.co.za to find out how you can get your hands on this incredible guide. And of course, now to do a different kind of guide, of course, it is a conversation that we're having with Mboweni, who's the head of operations at IHS Investments. Good evening, Soli. Thank you so much for joining us.
Good evening, Zama, and good evening to everyone that's tuned in.
So, I think one of probably the big questions that viewers at home might have is around what asset management is. I think before we even look at what tips they should be thinking about, what exactly is asset management?
Yeah, thanks, Zama. It's actually is a topic that most people confuse. People confuse asset management with property management. They confuse it with facilities management, and there's investment management. And yeah, so I think in a nutshell, asset management involves the acquisition of property, if we're talking property, the monitoring thereof, evaluating, and just making sure that you can extract value in the property, both from an income point of view to capital appreciation point of view. So that's what it involves in a nutshell.
And so, what kind of entities will you then say asset managers essentially cater to? Because you were saying earlier that, oftentimes people do confuse asset management to perhaps facilities management or even property management. So what would you then say asset management in particular caters to?
Yeah, so asset management, it really is, call it in the old days, we used to call asset managers the owner's representatives. So when you are an asset manager, you actually are representing the owners of the properties if you are working for an organization, in making sure that those properties would perform to the plan, for lack of a better word, the objectives that have been set out for a specific property, for the portfolio, be it diversified or just a single sector investment. So it's about the health and well-being of the asset in the main. So the asset managers are really there to make sure that the property managers and the facilities managers, who are the guys that are doing the day-to-day management on the ground, things like maintenance of buildings, making sure that the environment around the properties are still conducive and are good for what the property is intended for or for the users. So the asset manager is the person that's supposed to carry the whip and make sure that the property managers are doing their job. They're collecting their rent if it's an investment property, and they're keeping the properties. The upkeep is to the right standard.
So you've already started touching on something else that I wanted to ask, which was, of course, the difference between the asset manager and the investment manager. But perhaps take us through, which one would be best suited for property investors. A lot of our viewers at home are property investors. In the event where they're looking for certainly building their power team. We often talk here on the Private Property Podcast about the importance of having a power team. And oftentimes, a lot of investors who have quite a number of properties essentially do not run them by themselves. You obviously do need, different, certainly a team of different people who are experts in their respective fields to help you run this business and essentially manage your property portfolio. So in the event where you're a property investor, which one would be best suited for you to be working with, the asset manager or an investment manager? And perhaps take us through how that relationship would ideally look like.
Yeah, so, I mean, without going into the dictionary, you can easily say that you can use the words interchangeably, investment management and asset management. But in this case, investment management would include even those asset managers that look after shares, bonds, listed equities, call it not the tangible assets like real estate. So investment management, if you want to distinguish it to real estate asset management, you would say, is the entire financial management of all those type of asset classes that I kind of alluded to. Maybe the easiest way would be for me to maybe list a number of functions that an asset manager that looks after real estate will typically have as their KPIs, so that people can understand what it really involves. So, for example, the people that are looking, the asset managers that are looking after listed equities, they will sit in front of the screen and they'll have a dashboard that shows them what the shares are doing, and they would make sure that they understand the companies that they've invested in, and they would move the shares as they see that there is risk in one share. Maybe we need to buy this one, and that way they make sure that they maximize returns and also capital gains for the investors. Same thing applies with real estate asset management. Some organizations prefer to have different people doing different roles, but in its true nature, asset management should include acquisition of new properties. So even if you have new business managers in the business, when they do the acquisitions, the asset manager needs to be involved in the decision making, because they are going to be the ones that look after that asset. So, and they need to be the ones that set the budgets. They need to evaluate the income and expense of that property, because they're going to live with this asset. So income management, expense management, from setting up the budgets, and you don't just do that without having scanned the environment where the asset is, to make sure that you are asking for market-related rentals. Assuming the asset has been around, as in maybe it's 2 years or 3 years old, there's a thing called life cycle costing or life cycle management. You know, the asset manager is also responsible to advise the owners when an asset is tired. And some people might say, but it's property. How does property get tired? Some properties become obsolete at some stage, because either the what do you call it, the locations, the location is no longer a prime area. I'll give you an example with industrial areas. The more closer you are to the mode of transport for goods and all of that, your industrial properties are more prime. But the farther away you are, you know, you start losing tenants. Tenants want to be closer to where they'll be able to move goods and all of that. But I'm talking logistics, obviously, as an example. So asset managers must be able to say, this asset is no longer giving us the returns that we want, or we've reached a ceiling in terms of maximizing rentals in this. Maybe there is an oversupply of that asset. For example, residential property, you might have a node that is getting, because it's popular, all the developers are flocking there, and the more supply, it means there's going to be pressure on the prices. So asset manager needs to be proactive, needs to constantly scan the environment to see the changing trends, and make those decisions or those recommendations to the owners to either sell or buy more or scale down or change the use. Asset managers, in our case, where we are managing assets that are owned by a listed company, the shareholders, you also need to be up to speed with the regulations that governs. In this case, we are a REIT. There are regulations as per the JSE in terms of what can be done, what can be done, what needs to be public, and all of that. And this is slightly removed from the physical asset, but I'm just highlighting that you need to at least be knowledgeable with the JSE regulations, tax issues, legal issues. In our case, where we look after residential properties, the Housing Act comes into being. I think I've said a mouthful for now.
And you know, sorry, I think it's actually so important to understand what actually goes into this, because as you were speaking, a part of me was just thinking around the importance of working with somebody who understands things like doing a thorough market analysis and what goes into that market analysis. So if you're certainly a property investor who, let's say, is looking at residential property and has a particular LSM in mind. So if you're working with an asset manager who looks primarily in real estate, the ability to assess the market and even probably advise which areas are best for you to go into, given your risk appetite and the kind of profile of the tenants that you want to work with, is probably so important. And you tend to find that not everybody has the ability to do a very thorough market analysis when it comes to real estate. I think oftentimes people certainly look at and perhaps when you look at the way that Gauteng is currently being built and the number of complexes that we're seeing, that sometimes you often wonder what informed construction of some of the complexes that we're seeing all over Gauteng. Because if you looked at what the data is saying, so whether it's the migration data or the employment data, there probably wasn't enough evidence to support something being built in that specific area. So then working with, of course, asset managers who understand the importance of things like that and can give you the right data so that you're best informed to make that right decision certainly is important. So we're going to go for a quick break, and when we come back, I want us to look at tips for new property investors, what kind of tips you would give a new property investor from an asset management perspective, because I think a lot of them, they're currently being inundated with quite a lot of information. We're getting different types of news. I mean, one of the things that I like asking guests is this the right time to buy? Should we be buying now? And what should we be thinking of before you acquire a new asset? So we certainly do want to explore what tips you would give new property investors who are looking to go into property, or certainly looking to grow their property portfolio, but need to be asking questions from an asset management perspective, or certainly looking at their appetite for going into property or growing their respective properties from an asset management perspective. We're going to go for a quick break, and when we come back, I'll still be in conversation with Mboweni, who's the head of operations from IHS Investments. If you are, of course, a property investor, do send through your questions. Do you have any reservations about going into the property market? Or perhaps if you're already into the property space and you've got a few properties and you're already a very active property investor, I certainly want to hear, what are some of the tips you'd share with newcome property investors or people who are looking to go into property investment. I think one of the big things I love about our community is our ability for us to learn from each other, and certainly as property investors to share best practices and what has worked for us. We're going to go for a quick break and we'll be back just after this. Welcome back to the Private Property Podcast. I'm your host, Zama. It's the Monday edition of the Private Property Podcast, and this evening we're looking at asset management tips for new property investors. I'm in conversation with Mboweni, who's the head of operations at IHS Investments. So, before the break, we're certainly looking at what asset management or investment management entails and the kind of work that asset managers particularly those who have a focus in real estate, focus on, and some of the considerations that they go into when they're making their decisions and the roles and responsibilities of the different parties. I'd now like us to explore some tips for property investors from an asset management perspective. So if we're looking at new property investors or people who are relatively new, what kind of tips would you give them for them to be able to best navigate their property investment and also be able to make better investment decisions within the property space?
Yeah. So thanks, Zama. In the old days, we used to live by the saying that said property is all about location, location, location. And I think things have changed a bit. It's not all about it's not all about location, location, location. So by that I mean that for those that live in Gauteng, buying a property in Sandton does not necessarily mean that it will be a good investment. So Zama spoke about the work that if you are an asset manager, you need to really research the area where you need to make an investment. There are some maybe signs, especially in a node that is growing, where there is new developments that can be a sign without doing a lot of research. If you see, I'll give an example with maybe an area like Waterfall in Sandton, or on the northern side of Sandton in Midrand. There's new developments there. So that's a sign that the market is booming. But the question is, at what point do you get into your investment? Ideally, you want to get in early before the prices go up. So it is really is the first thing, key thing is to do your research. And we are fortunate, at least in South Africa, that there is a lot of data in terms of prices. And one other thing that people can do before they make investments is that you consult the estate agents in the area. They know the area as much as they would want to sell you every property they come across, but they can give you some guidance. When you are in the investment, I think, again, assuming we're investing in residential units and you're buying into a complex, you really need to know the financial well-being of the body corporate where you're buying into, because if you don't have good management, the levies might eat into your income. So those are some of the things that people would need to the physical property. Sometimes we tend to overlook the structure and how well it was built, and we just do impulsive buying, and you end up getting into a scheme that is not well built and has got problems, and there's big maintenance items for the body corporate. So I think that those are some of the tips I would give to potential investors.
We've got a comment here, Soli, from one of our regular viewers, Upong Sabakwena, who says, I wonder how well asset managers are doing in this pandemic. Corona caught everyone by surprise. And I do wonder, the different ways that asset managers have cushioned certainly a potential crisis. And I think perhaps not to speak too broadly around asset managers in general, but perhaps give us insights on perhaps tips that you would give people who are in property in particular around different ways to cushion a potential crisis. I mean, we already know that the current one that we're facing, hopefully we're never going to face a crisis of this nature before, but understanding that there are always crises, certainly economic crises we saw in 2008, we're now in 2020. So what are some of the best practices or best ways that we could potentially cushion, particularly a financial type crisis when we're dealing with property as an asset class?
Yeah. So one of the better ways is you need to, they call it the capital structure of your investment needs to be sound, needs to be solid. Where we're buying at 90% loan to value, when you get into situations like this, then you're gonna suffer. So you almost need to manage your gearing. For people like us managing big portfolios, it's a big
it's a manual task.
Yeah. So you always need to have some cash on the side that can keep you afloat. And I know for individuals that might not be an easy thing to do, but I think if we have individual Y who has 5 rental units, during this time, your tenants will be suffering and they'll come to you for help. And it's to keep, you need to find ways to keep them in the property, be it reducing the rent, just to make sure that you still have some income and you can deal with your monthly bills.
You know, Soli, we've got another question, but before I get to it, you mentioned something that's so important, and I think a lot of new time investors in particular tend to not think about it, and this is around managing how geared you are, and I think a lot of us, certainly when we're starting off, we don't think about the importance of managing that. If anything, a lot of times people are happy that you get 100% loan to value from the bank, and you take it across multiple properties, and not understanding the potential risk that might have. But instead, you're thinking it's a facility, I'm using somebody else's money, except that's all debt from a bank. Perhaps take us through, quite briefly, certainly for almost a gearing 101 for new property investors, around the importance of understanding what having 100% loan to value across multiple properties, especially in the beginning of your property portfolio, the limitations that might have, because I think we don't think through it. Instead, you probably get excited that you have quite a number of multiple, home loans from banks, and they are all at 100%, and they are all used towards, like there isn't any excess money that you're putting on so that you have a bit of equity from the onset. So perhaps just take us through understanding gearing as new time property investors.
Yeah, so I mean it's dangerous to over leverage or over gear because when interest rates go up, you're gonna find yourself in trouble. It might make sense initially when you do your investment. You look at your potential income, and especially now when the interest rates are low, and you can. You know what your levies are going to be, and you can just make it. Or maybe you're left with $1,000 after paying your interest. When the interest rates go up, there's a problem. When an area goes through some problems and the values come down, you have another problem, because then where you started at 100% gearing, you're now maybe sitting at 105. The problem is that you're not going to be able to service your debt, and that's going to put a squeeze, and eventually the banks are going to repossess. So ideally, You want to put down some deposits in your properties. There's also, which is part of asset management. If you have a portfolio which, call it maybe you have 10 units of $1 million each, and you bought these properties in different times, maybe the first one was 5 years ago, you need to get into the habit of getting those assets revalued. And if one of them is doing well or two of them are doing well, you are able to can do a kind of a portfolio gearing and leverage off the valuation of those properties that are doing well. That way, yeah.
And I think, certainly, I'm already promising viewers at home that we're certainly going to look at something like that, because it certainly does go to structuring your portfolio in the different creative ways you can structure your portfolio and use the properties that you already have in your portfolio to essentially grow your portfolio. And I think those are some of the nuggets that new time, and even some investors who are already in it, who've been in it for a while and are probably servicing their debt quite well and are able to pay all the associated costs of the respective properties fairly well, but don't quite know how to go from, let's say, 4 units to doubling, or perhaps from 6 units to adding more units, because we don't quite know how do you then leverage off the portfolio that you have, whether it is refinancing it, looking at whether the asset you acquired 5, 7, 10 years ago now has more value, and what are the different ways you can do now that value has essentially increased. We've got a question here, Soli, from our YouTube viewer, who is Ukosi Moman, who asks, hi, thanks for this platform. Thank you very much. It's a pleasure there, Ukosi. And her question is, which cracks are the ones you must look out for? So essentially, what are some of the, we'll say, loopholes as a new time investor you should potentially look out for as you're assessing the asset that you're interested in?
Yeah, it's overpaying for an asset. That's one of the biggest mistakes. There are salespeople out there, and there are salespeople, if you know what I mean. And
we're seeing a lot of the salespeople right now, because I think even the estate agents are saying, look, the interest rates are low. So some of the prices, you're seeing them being higher than what they essentially should be, because they are riding on the fact that, look, the minimum payment is going to be substantially lower. So if you just put this ad up for, let's say, 600,000, when really it should probably be going for 495, they think people will bite, because servicing a 600,000 Rand debt at this current moment, if you were to get prime as an interest rate, is of course substantially lower.
Yeah. So and I mean, if you're buying in an estate, it's easy to get recent sales in that complex, and you can compare. You can even ask the same estate agent to give you the latest transfers in the estate, even if it's in a suburb, so that you can get a feel of the pricing. What else is it's buying in a node or in a complex that has got problems. If all of a sudden you see all the for sale signs everywhere, you need to ask yourself, why is that? It might be the opposite, that it's a booming area, but it might be that there are issues. So those are some of the things that you will look at.
The last question for this evening, Soli, is also coming again from YouTube, and this time from Untogozo Mabanga, who asks, what kind of rental is the best to buy for a first-time buyer? And perhaps to paraphrase that, Soli, it's when you're looking at the rental versus your purchase price, it's probably trying to get a sense of perhaps what the yield is supposed to be, and perhaps not just yield, because I think one of the things is, because when we calculate the yield, just look at the purchase price. Sometimes I actually like to factor in the collective costs, and then obviously multiply it by 12, and then add that onto the purchase price to get a sense of, okay, what are the almost associated costs with that particular property. So what kind of figures would be looking at? I mean, I know some different investors use different percentages to help them make the best decisions when it comes to what percentages they're exploring. What would you say are some of the
my rule is, because I also do investments on my own, my rule is I need a 12% gross yield. Not easy to find assets, but you need to cushion yourself at least 3% above cost of money. So if it's going to cost you 7% to service the debt, your return on that investment must be around the 10%. You're giving yourself about a 3% cushion there, and that would be net.
I think so.
It doesn't come easy.
Yeah.
But you must have, at least if you want to push it, have a 2% differential between the two.
No, I think one of the big things, and we've certainly seen it in Gauteng, when a lot of the estate agents put up their ads. Oftentimes they'll say they're welcoming, or this is a great unit for investors, and some of them will go to the extent of saying it's got very high yield, and yet let's say it's a 7% yield. And so if you really are an investor and you're thinking, but how is 7% good enough necessarily for you? Because I think we all have different risk appetites and different sort of rules of thumbs that we use to grow our property portfolio. So 12%, as you're saying, it can be quite difficult to achieve depending on the kind of asset you're looking for, the kind of area, but it's certainly achievable. It certainly is an achievable, amount, especially for gross yield. But Solly, I think the last comment here, we're asking visitors at home to share their own tips for new-time property investors and what has essentially helped them. Bong's coming through again saying that this is why it's so important to have an access bond. Says it makes it certainly for when times are good, you pump in money into your access bond, and it will help you in times like this, and it will reduce the interest you pay over the life of the bond. It will also help when interest rates start rising. It's a win-win-win for everybody involved. So that certainly is one of the tips from Ubong Sabakwen. I'm going to squeeze in a last question here that's just come in from Usoli Mashabela, who asks, from an asset management point of view, what non-traditional challenges does one face with respect to purchasing timeshare assets?
Yeah, so I didn't hear what non-traditional.
What non-traditional challenges does one face when purchasing a timeshare asset?
Yeah, I hope I'm getting that question correctly, but timeshare is a difficult asset to buy. I have a couple myself. The challenge is that, do you get to use it? And maybe I just don't know how to manage my time to be able to use it. But for me, is I haven't seen value in what I've paid in the two timeshare assets that I have. I guess if you do timeshare as mates or friends in an asset, so like a syndication of some kind, that way you can get to use it. But if you're going into the resorts, it's just, for me, you don't get the best money for your buck.
So I think we're going to leave it there this evening. Thank you so much for joining us.
Yeah, thank you.
And that is Usoli Mboweni, who's the head of operations at IHS Investments. I do hope that the new property investors who are looking to go into property investment have certainly found this evening's conversation insightful. And for those of us, of course, who've been in property investment for quite a bit, are learning new things to apply in our own respective property businesses, and are going to be growing our property businesses based on some of this evening's tips. Well, folks, that's it from us this evening on the Private Property Podcast. We'll be back again as usual tomorrow evening at 7 p.m. And as usual, I hope you're keeping safe and also keeping warm, because it is quite a cold one, especially in Gauteng. We'll be back again tomorrow.
All the best.
Hi, I'm Alan Footman. I'm a sports tour operator from Cape Town. My family and I have been living in the southern suburbs for 21 years. What we love about the neighborhood is it's very family orientated. lots of things for the kids to do, especially here where we are next to the farm, where folk can walk the dog, go for runs and enjoy the fresh air. In the southern suburbs, we're lucky enough to have some of the top schools in the country, and on top of that we have the University of Cape Town, one of the most famous universities in the world. Newlands is a great suburb, all the sporting amenities, Newlands rugby ground, cricket ground, etc. Down the road at Claremont, lots of shopping centres for the kids and for the mothers to do their shopping. Fantastic pubs and restaurants around like Forries, Springbok Bar. Bishop's Court is full of beautiful upmarket homes. Kirstenbosch Gardens, National Botanical Gardens right next door. What attracted us to Constantia is the large open spaces. I've always wanted to be a farmer, and now I'm living next to Constantia Wine Estate, the oldest wine farm in the country, where you have fantastic wines, great restaurants, got the best of both worlds. My family and I have loved every moment of living in Constantia. We couldn't be happier, and this is our neighborhood.
Tips for dealing with the bag. So perhaps you're renting in a property where it is run by a body corporate.
Understanding the basic calculation, income minus expenses, and you want to be left with a positive income.
It is a very tough game. It's not easy at all.
To stay ahead of knowing exactly what your clients need, what their teething issues are.
Have a joint mid-end inspection.
That a lot of people that are coming into sectional title homeowners associations are, just like you described, not only first-time homeowners, but first-time owners and residents in community schemes.
They get to see the perspective from the other side of the aisle. And I think that's a really important thing to do.
It's a market that's estimated to be transacting at least 9 billion rand per year. So it's a huge market.
In order to get there, you need to be able to build up a track record.
Your cash flow model needs to be sharp.
A quote comes to mind. The best time to buy a property was about 10 years ago. The next best time is now.